Good evening, everyone. Thank you for participating in this second day of the webinar series, which we are doing for understanding what is ideation till pitching. So yesterday we had ideation and design thinking by Shweta Verma, who spoke about what is ideation, how do you do design thinking, various tools for design thinking. And today we have Muralidhar with us, who will be talking on business model development. Muralidhar is the alumni, or he has done his bachelor's from NIT Surathkal, and he's currently the founder and CEO of Lodestar Education Services Private Limited, and also member of governing board from last year to TiE Bangalore. So with this, I would like to welcome Muralidhar. Thank you for accepting the invite and also helping us to lead this unique initiative. First time we are doing from TiE Matrix Forum. So with this, I leave the floor to Murli. And one more housekeeping announcements. If you have any questions or anything, you can put it on chat window, or end of the session, you can ask any specific questions you have by unmuting yourself. Meanwhile, please remind your friends and colleagues, your classmates, if they are yet to join the webinar, please remind them to join the webinar. With this, I hand over the mic to Murli.
Okay. Hey, am I audible, Abhishek and everybody?
Yes, you are audible.
Okay, so good evening, everybody. It's nice to be here. Abhishek and team have put up a very good competition and a challenge, and it's a pleasure to be a part of that. I've been a serial entrepreneur for the last 2 decades. I've built multiple companies. A couple of them in the education and tech segment, one in the food segment. I've been a TiE. I don't know if you guys know, TiE or the Indus Entrepreneurs is a forum for propagating and encouraging entrepreneurship. It's a global forum, and I am a member of TiE Bangalore, the Bangalore chapter. TiE Bangalore chapter itself has about 1,000 members. All of them senior entrepreneurs who get together, do various activities which helps to promote entrepreneurship, to encourage, handhold young entrepreneurs. Through the year, there are numerous initiatives that TiE does. One of them is the Matrix Forum, which is the initiative of TiE Bangalore in the area of deep tech, IoT, AI, basically cutting edge technologies. And the Matrix Forum itself has been in place for about 9 to 10 years now. There's a massive global summit that we are organizing for Matrix Summit in June 7th and 8th. And as a lead up to this, we are doing this competition, the Matrix University Awards. So firstly, thank you all of you for participating in this competition. We're happy to connect young bright minds from the colleges, from the university to the Matrix Forum, the leaders, the experts in the latest absolutely cutting edge technologies, people who are building those technologies, people who are leading companies in those technologies, people who are starting up with new startups in those technologies, people who are investing in those technologies, right? So it's a fantastic opportunity, I think, for students to be a part of that. So as a lead up to that, we are doing this University Awards, and thank you again so much for participating in that. As Abhishek also mentioned, one of our objectives at TiE is to educate, handhold, mentor young startups. And in that initiative, we felt that just to do a competition would not be enough. We should also, share with you some of our insights, our experiences, which can help you to work on your business model and help you to sort of develop your ideas in such a way that you can present it to in a competition first, and then maybe to investors, and then also fine tune the model in such a way that you can eventually get to starting up your own dream business idea, right? So that's the whole context of this conversation. So you guys had a session yesterday. How many of you attended it? Can I get some responses? You can mention in the chat window, you can raise your hand. How many of you attended it? The session yesterday? I see one hand going up. Okay.
There is an option to raise hand as well as some emojis. You can go ahead and do that.
Yeah, or you can on the chat window also. Okay, I see 2-3 hands going up. What about the others? You guys didn't attend it? Abhishek, they can unmute and speak?
Yeah.
Okay, cool. So I want to know a couple of reactions. What did you learn from that session and was it useful? The session was on ideation and design thinking, right? Which is basically the first step of any startup, right? How do you think of an idea? How do you create a new idea? And how do you think through it? So what did you guys think about it? Anybody? You can put your comments on the chat. Did you find it useful? Did you like it? Was it helpful to you? The people who attended it, I'm asking them. No comments. Obviously, if you didn't like it, you can say that it was not useful, right? Yeah. What do you guys feel? You guys attended a session yesterday. I think many of you would have spent about an hour attending the session, spent your valuable time. Shweta Burma, who is a young, expert in that area, he took that session. I've seen his sessions earlier. I like them. So what did you guys think? Did you see a value in there? Did you learn something out of it? Anybody, you can unmute, speak. You can put your comments on this thing. Yeah, Saujanya says she didn't attend it. Anybody else?
Hello, sir. I'm Gagana from University Vishweshwarya College of Engineering.
Sure.
And a very good evening to you.
Absolutely. Good evening.
Yesterday, I attended the session and it was quite helpful.
Yeah.
Actually, we had a subject regarding the same thing, that is design thinking, in the second sem.
Okay.
And we were given projects regarding it, which we did with our teams.
Okay.
And yesterday it was just like I found it interesting because it just sir taught us how to think out of the box to make any project a success. And also design is not just aesthetics, it's basically involves a lot of things. So basically he taught us to apply innovation in our ideas and just think out of box to make anything a success.
Fantastic. Which year are you in, Gagana? Which semester?
Oh, I'm in third semester computer science.
Fantastic. So anybody else, any other viewpoints? Learned how to look at an idea from perspective of feasibility, desirability, viability. That's what Amog says. Okay. What else? Anybody else? Any other viewpoints on this? So I'm asking is because, typically when you're thinking of a startup, that's the first step, right? How do you think of an idea? How do you innovate an idea? How do you think? How do you start? That's the first step, right? Before you get on to topics of business model development, or before you get on to topics of startup math, etc. So that's the fundamental first step. And I've been in the startup space for 2 decades, and I see, and I'm a mentor at TAI from, my IIM alumni or my engineering, which is NIT Surathkal, there. A lot of startup plans keep coming to me, and many times some of these fundamentals are not in place, and hence these sessions which you get from experts, I believe would be. So Dhruti says, yes, sir, felt it was learned to never start solving before defining a problem. Fantastic. That's one of the fundamental things I tell. In fact, I'll tell you a small anecdote. Right now, I'm evaluating a proposal by a college professor. They're doing research in some area, and they sent me a proposal. And they sent me a proposal 6 weeks back. And since 6 weeks, back and forth on email, it is going on. We are refining the proposal because the fundamental problem they want to solve, they're not able to state clearly. They're saying 25 things, but 25 different things, and 25 different things you cannot obviously solve in any one project. So it's a confused project, but they're very enthusiastic people, and technology wise, they're good people. But unfortunately, they're not defining the problem precisely. So I think what you learned from Shwetab is something nice. So yes, so that's my impression. You have to define a problem very accurately. You have to think through design thinking principles for the problem. You have to identify your customer set very clearly, and only then can you start building the idea of the thing. So when you typically, so many startups start, right? Hundreds of startups are there, and you must have also heard that 1 in 10, maybe only 1 or 2% of the startups succeed. Why do you think this happens? And in many industries, for example, if you look at tech, okay, like Byju's, there must be at least 25 other companies, right, in school education, or like Simply Learn in skills education, there must be maybe another 10 other companies. All of them don't succeed. Why don't they succeed? What happens? Anybody? You want to unmute and say? So this session is going to be like this. We're going to talk through this topic. I have a couple of slides. I'll take you through that. But the session is not going to be like a lecture, because I'm not a professor, right? I'm a practicing, I'm an entrepreneur. I implement stuff, so I don't have a lecture to give, right? So tell me, why do startups fail? What happens? Anybody?
So sometimes the problem can be lack of funds.
Correct.
Like even though you have a good plan, lack of funds can be a barrier. But in some
Correct.
other cases, lack of research could be a thing.
What do you mean by lack of research?
Means basically if you have a plan and layout and you don't know like what exactly are the statistics, and you don't know what are the problems that are facing that people are facing nowadays, and you don't do a proper research onto what market the idea can fit into, and etc. So lack of research can be a barrier too.
Yeah, so basically you're pointing to lack of understanding the customer. I think Omkar has also said the same thing, providing solution to the problem which is not really present. No new development, only competing with existing products, lack of innovation. So all of you are talking about the need of the customer, which was really what you were discussing in the first thing. But many entrepreneurs typically believe that they have spent time and understood the customers. And that's the only thing they can do initially, right? When you start a new startup, you can only understand the customer. You're not really into developing the product or MVP or something. That comes a little later. Firstly, you have some experience in life, you see something and you feel there's a product. Yeah, so I agree, Gagana, that it could be a lack of adequate information on the customer or on the market size or whatever. That could be one thing. But in addition, it could. So what else? So there are many companies which they've started off and they're doing exactly similar to some other companies, right? So do you know that a lot of startups are loss making? Are you guys aware of that? Are you guys aware that a lot of startups are loss making? Yes. So Pritish and Amog and Gagna say yes. So why are they loss making? What happens? Yeah, it could be high competition or monopoly from other companies. Syed Shoaib says, yes, true, correct. There could be multiple reasons. High competition, monopoly, innovation, yes. But why are many startups loss-making today? In fact, most of the big startups, right from Flipkart to Amazon, everybody is loss-making only. Why is that? Customer acquisition cost is very high. Trying to acquire more customers and capture market, bad partnerships, true. So now these are topics, whatever you talked about just now, guys, these are topics which are not related maybe to the actual, even the whole thing of high competition, monopoly, say, thing. All these are not directly related to the customer need. There could be a customer need, there could be a genuine need of the customer, and you may have identified that, but how you're servicing the need, how you are acquiring customers, okay, how you are going about growing the company, how many players are there in the market. Many of these are factors which also cause, for example, I don't know if you have observed in the car market or in the like today in the EV scooters market, there's so many players, right? Some will succeed, some will not. What are the difference? Maybe, and a lot of times the products, actually, if you look at the car market, there are so many foreign brands, right? Only a few but succeed and grow. Rest don't succeed and grow. Okay, so that is because fundamentally, when they think of their business, there is something called the business. They should have a unique approach to the present issue, agreed. But a lot of markets, they have similar products. Like, for example, like Byju's. Byju's is doing a basic school education, correct? And they're doing a bit of test prep, right? In the test prep market, for example, there are many, many customers, right? In the big offline market, there is Akash and others. Those players, Alan, those players are there. In the online market, the people like Vedantu. Most of them are similar, right? They do similar work. Not too much difference in the service, but some of them succeed, some of them not. And that is because maybe the way they run the business, okay, the way they manage their business, that could be that is wrong. And that is related to the business model of the company, okay, that how they thought of the business, how they thought of various aspects. So that is where it's important not only to think of the unique idea, but how do you develop the idea? How do you think of various aspects of the idea? That is very, very important. So that's our next topic today on the business model development. So let me just get into that. And let's keep this channel of communication open. Please ping me with questions on the chat. Please unmute and ask me questions if you have. I'll also keep asking questions, and that's how we'll do this session. Okay. So let me just share my PPT. Are you able to see?
Yes, sir.
Yeah. So let's go to some basic elements. So today's session, what we will do is we'll talk about what is a business model. Okay. Why do we need a business model? What are the elements of a business model, and what are the types of a business model, right? We'll talk about these things. And I'll talk about all this in a very basic way. There's a very complicated way you can talk about it. And, you can, this topic itself, you could do a whole course on it. And when you go to an MBA program, you basically are learning many elements of it. But my purpose today would be to talk about the simple basic elements of this. And the reason I want to do that is because you guys are just starting to think of you're in college, you're just starting to think of a new idea, and you're also participating in a competition right now. And many times when I have mentored teams like this, or even youngsters, some of the basics are not clear about a business model, and they will present the idea to investors or to the pitching jury in a very bad way. And when you present it in a wrong way, the jury will ask a lot of questions, and then you're lost. So some of this can go away if you understand your basic financial model, business model well. Okay. In fact, having said that, as I said, I mentor a lot of startups. Right now, I'm mentoring a startup which has been 9 years in the business, and they are trying to raise further funds. And the last, again, 4-5 weeks, our effort is to get the business model right. Okay. So business model is an essential portion of your story. It's an essential part of the success of a business. And many businesses flounder because they've not got the business model. Okay. They may have identified the customer well. They may have understood the need fairly okay. But how they develop the business is where they lack. Okay. So what is a business model? Okay. A business model, in a very simple layman term, is a model that describes how a business runs. Okay. So if you have to go to somebody and say, what do you do, right? You can say that I am an online e-commerce portal. What do you do? There are products, there are customers who come to the portal, and they buy products on it. Okay. So this is a basic what you do. How does your portal run? Now, the moment they ask that, okay, that is when, so your end customers are not interested in your business model really, right? They experience the business model. Now, who are you telling the business model about? You're telling it to your investors, or you're telling it to, your new recruits, so you're explaining to people, that is where a business model, and you're also using that explanation to understand how you run the business. So basically, a model which explains how you make money, how the business makes money, how it acquires and services customers, how it ensures that the business grows. Okay. So what are the plan for that? For example, let's take the e-commerce model. Now, if you say, how do you make money? Okay. Can anybody tell me how does Flipkart or Amazon make money? Anybody? Hello? Is an answer? Yeah. Ads revenue, says Shomil. Discounts during major festivals, they'll make money. No. Commission and listing of products. Okay, correct. Takes percentage of sellers. Correct. So there are multiple ways they make money, right? So yeah, it's interesting. Some of you, I think, have some idea of business. So for example, things like ad revenue, that is an interesting part that Shomil has mentioned. Yeah, so it's not just the commission that you take on the product. There are listing fees, for example. There are fees they take to help you to do marketing on their platform. So there are multiple ways that they make money. Okay. How does a Flipkart or Amazon acquire and sell service customers? How do they acquire customers? Anybody? How do they acquire? How do they acquire customers? Advertising. What do you mean by advertising? Advertising is a general word. Sales, digital ads. Okay. E-commerce ads. That's one way it acquires. What else? Sales, Kaushali, is a very generic word. Everybody sells, right? But how do they sell? That's the question. How do they acquire customer? We took an example of Flipkart. How do they acquire? Yes, search engine, right? How do they, on the basis of, Shomil says, on the basis of what people search, personalized ads, yeah, SEO, yeah, Yusuf says SEO, correct. So what happens is they use the internet and the power of the internet in such a way that when you are searching for any product, an ad for related product can come up. What are the other way they acquire? So when you're searching for a product, it comes up, and that's how when you like the product, you want to click, you're sent to the Flipkart site. They'll ask you to download an app, whatever, and then you're there. Yeah, advertising, correct. So Flipkart and all in the early days used to advertise a lot. Today, if you look at IPL, what are the brands you see on IPL today? So some of the biggest brands, Jio, yes. So that's one of the common brands. What are the other brands? Visit Saudi, okay. Ather, yes. So that's fun. So Ather is advertising, and people are becoming aware of Dream11, Tata Neu, correct. They're becoming aware of the thing, and once they become aware, they are then obviously they will search for it somewhere online, and then they will reach, right? So this is one of the needs of what is a business model, right? Let's go ahead. Okay. Slide stuck. Yeah. So here's a quick representation of when you say a business model, then what all, many elements to a business model, guys. So, but you're looking at, start looking from the bottom. So when you look at this thing, you have revenue streams in a business model, which means what are the ways we discussed in the case of Flipkart. It's not just one type of revenue. They get different kinds of revenue. Cost structures, we'll talk more about it later. Many cost structures. What are the channels through which you sell? What are the different value propositions that you will give to different people? What are the kind of segments of customers that you go to? right? That's very important because all products are all products made for every customer? For example, let me ask you this question. If like, let's say BMW car, okay? So BMW car will cost, say, 50 lakh rupees. So anybody who has 1 crore in his bank account, is he a customer for BMW car? Anybody maybe who has 2 crores in his customer. Target customers are different for each product. Okay. So my question is, anybody who has 2 crores in his bank account, as you say BMW car costs 50 lakhs. Anybody who has 2 crores in his bank account, is he a customer for BMW car? Depends on customer need. That's what Pritesh says. So who is a, so suppose I have 2 crores in my bank account. Shomil says yes. So everybody who has money is a customer for a product. Depends on customer need is what Pritesh says. So what do you mean by that? Their interest, correct. So there are a lot of rich people in the world who don't own a BMW car. Why? There are many. In fact, if you go to many in the city itself, there will be many people who will have more than 2 crore rupees, but they will not have a BMW car. That many BMW cars don't exist in Bangalore. Why? Because a BMW car maybe is a product which is made for somebody who wants that prestige, right? Wants that style, wants that to show off that thing, right? So he wants the demonstration of this thing. So those are the needs that are BMW, or maybe likes that superior quality of a car, right? The experience, the ride experience, and the driving experience. So there are needs, right? So those are specific needs that the BMW. So everybody who has money does not buy every product. Okay, now I'm saying the statement, but whenever I when I mentor startups, this is one fundamental mistake everybody makes. They will say that, so this product is required by everybody. There is no product in the world which is required by everybody. For example, let's take Flipkart, right? Flipkart and Amazon, which is the online e-commerce portal, they actually service maybe only 1 to 2% of the retail market, of the products market, even though they're massive companies today, right? Why is that? Say if you buy clothes, simple things as clothes, or you buy a consumer durable, many people don't buy it on Flipkart. Why? Anybody? Flipkart is available. You can just go to the app and you can just click there and the product will come. But why don't you go to Flipkart? Why do Flipkart and Amazon only serve maybe 1 to 2% of the actual retail market? Why? And actually Flipkart is present anywhere. Wherever there's a phone, it's present. And India has what? 800 million phones and whatever, some 250 million data connections is a massive number, right? So still everybody does not buy from Flipkart. Why? Anybody? Hello? Anybody has an answer for that? Yeah, people want to experience the product. People trust issues. Perfect. Yes. Still people to go to test to buy the product. So Bharat says yes. So which means the needs of the people are not different. The platform e-commerce is only fulfilling one need. Okay. Even food, for example, many people buy Swiggy. Many families don't eat through Swiggy, right? They prefer to go to the restaurant because their needs are, apart from eating, the experience of going to the restaurant is one need for them, right? So like that. So, and all these people that I'm mentioning have the money. They can, and they have the need of the product also, but they don't use that mechanism. So that is about customer segment. So these are the elements that, a business plan, a business model thing. What are the key partnerships? What are the key resources? So this is what a business model is. Okay. I am not, my slide is here. So why is a business model required? Let's go to this topic, right? Typically, business model required is to make decisions, various decisions. One decision, how you will acquire customers, and we'll talk about it a little later. But depending on how you decide to acquire customers, your business model will be that. For example, let's look at Reliance, Big Bazaar, Reliance Trends, or retail stores. What is their business model? Their business model is sell those products in retail shops. Correct? That's their business model. So their customer acquisition is on the ground, will acquire customers. But at the same time, somebody like, again, Flipkart and Amazon, their business model is online. So they will acquire customers online, right? So, for example, for Reliance Trends or whatever, which is in the clothes thing, their key strategy would be where will you locate the store, and location is a very big decision making. But for example, for Amazon, the product thing will be how quickly your UI UX will work, how SEO friendly you are, how will customers, that will be very important. So the whole dynamics of your business will change depending on the decision you make. Then decision how will price a product also will comes with a business model. For example, will you like a software product, right? Will you sell it on a SaaS model, which means subscription model? Will you pay as the customer uses? Correct? Will you sell it like that? Will you sell the software free and charge for the services on top of that? Or will you sell the software itself? All these models exist in software, right? There are some software which is sold directly, correct? You buy it. It could be called a license fee or whatever, but you have to pay it once and buy it. For example, a lot of your Microsoft products are like that, right? What you put on a PC, and many of them say like that. Then there are products which are subscribed every year. You have to pay a subscription for it, right? It's license fee, annual license fee. So the way you price it is very, very different. Similarly, what are the other decisions? Clarity on what costs you will have. What are the costs that are relevant? What are the costs which are high? What are the costs which are varying? All that it's very important. Now, these are the reasons like acquiring customers, pricing a product, clarity on cost. These are some of the reasons on which, some of the decisions on which you could make big mistakes and your business could go wrong, right? Are you making money at unit level, at a gross margin level? One of the reasons why many of the startups are on loss is that at unit level, we'll explain what unit level is later. At a unit level, they're making losses. And because at a unit level, they're making losses, that business will mostly never be profitable, or, it'll take a long time for it to be profitable. For example, Amazon as a business globally, the e-commerce part, I don't think is profitable even now. And they've been in business for almost 25 years, but they're not profitable. So how does Amazon survive? He has AWS, and AWS is making a lot of money. So the company survives. But Amazon is growing its customers, and because they're growing the customers, market is valuing them. And because the market values them, stock market values them, it's called the innovative business model. So because that reason, the stock market is valuing them, so they're able to raise money. But fundamentally, if AWS was not there, or his other data storage, other businesses were not there, Amazon would have closed down. They would not, if they had not been able to acquire market like that. So also investments required. This is fundamental reason why you need a business model, and you need to have clarity on what your business model. You cannot raise money. You cannot pitch to people without clarity on this. So these are the elements of business model. We talked about it. I just brought it back again. Okay. So there are many elements, and we'll look at some of them. So let's look at each one of them. I'll go about this in a very simple way. What is revenue? Revenue is also called income, sales, earnings. Okay. And this is what the customers pay to buy the company's goods and services, right? So if you are a startup and you have some goods or you have some services, then whatever the customers pay to buy that is the revenue. Now, who are Facebook's customers, or who are Instagram's customers? us. Okay. So do you pay Facebook or Instagram? Because by no what, Gagana? What do you mean by no? We don't pay or we are not customers? What is it? We don't pay them. Correct. So then are we customers? Correct. Indirectly. But in the end side, it says in that, yes. No, we are not. We are users of the service. We are not customers. We are not paying them. Correct. So make money out of a data. Agree. But we are not paying them a single paise. Correct. Right. Twitter now is trying to charge, but we are not paying them. Correct. So it's very important to understand when you think of your revenue for any startup, to understand very clearly who are the users, who are the customers, and what will they pay you, and who is paying you for what. This clarity you should have very, very much. Okay, I'll give you another example. Suppose you are, say I run a company called Lodestar, which is a career guidance service, right? Career guidance is required by parents, and this career guidance for high school students. So students in 9th, 10th, 11th, 12th, if they have confusion, they take our service. Now, when I go to a school, okay, and I sell the service to them, the users of the service are the students and their parents, because their student is trying to make the decision. But the money is coming from the school. So the customer is the school, but the user is the parent, right? So that's how. So it's very important to have this clarity. Now, if you say that, no, my user and the customer will be both the same guy, which means the parent only will pay, then your business model is different. Then your business model is you're selling to the customer directly. So it becomes a different business model. If you sell to a school, then the business model is different. So these are the nuances that I'm trying to explain about the revenue. Okay. So let's go ahead. Why does it hang? It just stops. Yeah, okay. Now let's take a quick example. Out of this list, okay, I want all of you to write down what is revenue and what is not revenue. Make a list, all of you, okay? And I'll ask one or two people to read out the list. So funding by investors, selling movie tickets. These are examples from different businesses, right? So grants or donations, rent for your property, loans from a bank that you get, amount paid to vendors. So which one of them is revenue and which one of them is not a revenue? So quickly take 1 minute time and just list down. Done? Now I want some of you, Syed, Shwab, can you tell me which is not a revenue here? You can type or you can switch on your mic and you can tell me. Which is not a revenue? Hello? Syed or Prahlad, one of you.
Grant or donation, sir?
Who's this?
Pradeep Kumar, sir, from Nitya Meenakshi College.
Okay. So grants or donations is not revenue. Okay.
What Funding else? By investors is a revenue, sir. Then renting of property is also a form of revenue.
Okay. What else is a revenue in all this list?
Selling movie ticket isn't a revenue because it isn't fixed, sir.
Okay.
grants or donations are revenues because like NGOs, they receive grants or donations, which is actually a form of income
Okay.
if you view it in that way.
Okay. Okay. What about the others?
Amount paid to vendors is not a revenue.
Okay. Loans from banks?
Not a revenue, sir, because you can't keep taking loans.
Okay. Okay. Omkar, thank you, Pradeep. Omkar says selling movie tickets, grants and donations are revenue. Okay. What about funding by investors? Omkar? Yes, you're saying funding by investors is revenue. Okay, okay. So this is where, guys, you guys are young and it's very important for you to get this clarity right. So look at the definition. When you are you selling anything to your investor? No. As in the business not selling. You have sold the idea of the business, so they give you money. That's a different type of selling, but the business. So funding by investors is not a revenue. That's the investment you get. Correct. Selling movie tickets, that is revenue. Even though it changes or doesn't change, doesn't matter. But if, for example, if you're a if you're PVR or Inox or whatever, a theater, selling movie tickets is your main, what are the product you're selling? The experience of seeing a movie, correct? So that's the product or service. So that it's revenue. Grants or donations. Yes, if you are an NGO, okay, even then it's not a revenue. It's called it is still a grant only, because you're not selling anything to that investor. You are getting money to do some work. You can get money from many sources, but that's not revenue. That will be called as receipts or whatever, but that's not called revenue, right? So similarly, rent for your property, yes, because the service you're selling is your property, right? The renting of rentals, that is the income. Loans from banks, no. Why is loan from bank not a revenue? Anybody? Why is it not a revenue?
Sir, you can't keep
people
taking
always
loans.
they
Loans are
from-
limited.
Sorry?
Loans are limited. We can't keep, and one more thing is we can't be selling banks, sir.
Yeah, you have to give back the loan, right? So, and so loan, yeah, you may be selling many things to the bank. That's a different thing. Like banks also buy many products and services. Like if you're a digital marketing company, then the bank is maybe buying your services. So it's not that banks don't buy anything. But in this case, when you take a loan, you have to return it back. That's why it's called a loan, correct? So it is not a revenue, right? Revenue is not something which you return back, right? After a fixed period. Amount paid to vendors is definitely your cost. It is not a revenue. So it's very important, guys, that you go understand the definition of this, because when you think of, these may look like simple examples, but when you think of your business model, you have to very clearly recognize what is my revenue. Every money that comes into your company is not revenue, right? Only money in exchange of which you have delivered a service, only that, a service, or you sold a product, only that is a revenue. Okay. So now, when you sell a product, you add GST and you sell it. Is GST revenue? Suppose 100 rupees you add, is a product, you add 18% GST and you sell. Is 18% your revenue? Yes or no? No, Kagana says no, because that GST finally goes to the government directly, right? So that's not a revenue. So you have to call, you can show it to show to investors, you can say that's my revenue. But when you do your calculations, you have to net it out, and the net thing is your revenue, right? That's how the financial statement correctly is made. Yeah. So here's an example: selling movie tickets, rent for your property, revenue, funding by investors, grants or donations, loans from bank, all these are not revenue. Okay. So, see, it's very, while you may be innovating a lot, guys, but if you don't understand your business model and basics of business model, fundamentally, it'll be very difficult for you to even calculate your revenues correctly and to communicate if you're making money. And if you don't understand that, then you will completely go wrong. So as important as it is to innovate something, it's important to figure out what is your revenue. For example, let us take the example of Google as a search engine. Okay, now Google is a search engine. Who are its? Do we pay money to Google? No, correct. We just use it. We just use Google. So when Google thought of its plan, what would they say? They would say, when they pitch to the investor, they'll say, we'll make an amazing search engine which will have this innovation, that innovation. Instantly the result will come and the result will be fantastic. All that they will say. The investor will listen, fantastic, yeah, you innovated. Now, what is the business model? Who will you sell it to? So Google could have said that I will sell the search engine to corporates, correct? There are so many businesses like travel businesses, airline businesses, retail businesses, which can use that search engine. They can sell that intelligent search engine, highly intelligent. Financial markets, like a lot of people can use that search engine. So they can sell it. They could have created a B2B software and sold it, right? Or they could have said, no, we'll have a paid service. We'll have a website, we'll have an app. You have to pay like subscription fee, like Netflix. You have to pay subscription fee, 100 rupees per month to use it. That could be the model. Or they could now the current model. They said, no, we'll make it free. So the users will make it free. But how will you make revenue? Then we will make it through the ads that we will serve or some other products that we will have, right? So that's how. So actually, if it's very interesting in business case, in Google's case, initially they did not have a revenue model. When they pitched to their first investor, okay, the first check they got, they did not have. They said, sir, we're going to make a very innovative engine which will beat every engine. So the investor asked, how will you make money? He said, we don't know, sir. But our engine will be so super that in the entire world, everybody will use only our engine. So the investor actually, without knowing the revenue model or the business model, in the first investor invested. So this is a rarity, right? Most 99.9% nobody will invest like that. But in this case, they did. They said that they will invest. So it's a rarity. But that also explains the importance of knowing the correct revenue stream and the revenue model. Okay. So get this right when you think of your business plan, get your revenue. Everything is not revenue. Okay. Okay. Now, when you look at revenue, so what is revenue we discussed? Revenue model, right? Now, the ways we discussed this briefly while giving various examples, but let me just elaborate that a little bit. So revenue model could be when you sell a product. So per piece, it could be when you sell a product or a subscription for services. Subscription for services like Netflix, correct? Netflix or whatever, any of the, or even data plans, all the subscription services, right? You subscribe for the service and you keep using it, and it could be fixed usage or it could be usage as you use it, right? It could be fixed. And sale of product, everybody knows. You buy a product, you get revenue. So there are two models, right? So in the Google's example, also I gave you that they could have either sold the engine, they didn't sell it. They instead built the engine, made people use it, and they built a revenue through the advertising. So now you could have per unit of product service. That could be one way of doing it, which means, for example, Netflix, let's take. Okay, you could say that my revenue is per movie you watch or per number of hours you watch. Revenue could be like that, correct? Or in a product, it's very clear, per product that you buy, right? Or like in Netflix, it says, I don't mind number of hours you watch, number of movies you watch, but monthly you have to give me something. So it's time related. Okay, it's per time. So you could have a revenue per time or per unit or per unit of product or per unit of service. So it could have different. For example, software services, how is it built? Software service can be built as per hour, right? Per unit of time. Okay. It's typically not built as lines of code. Nobody will build as line of code, or it could be built as per as a fixed product. That means number of hours I spend doesn't matter, but I will, for this project, you have to pay me 10 lakh rupees. So it's fixed bid product. So for this product, it could be built like that. So software services could be built on, it's also built on number of people. For example, the many software products contracts are built on number of people. That, okay, you require 100 people to build your software. 100 people may work any number of hours, etc., whatever in the day, 8 hours, etc. We are not counting the number of hours, but 100 people. So 100 people into per person salary, I'm going to bill you that. Okay. This is services software I'm talking about, right? So it could be built on number of hours built. It could build a number of people. It could build a fixed product. So same service, what I'm trying to explain to you is same service, the kind of revenue you bill, the model can this thing. Okay. Now, some revenues could be one time, some could be repeated. Okay. Repeated meaning every, like Netflix, classic example of repeated. You have to keep buying that. But for example, Microsoft OS license or Microsoft, whatever Windows license or whatever. Now, these products are one time, right? Though it's called perpetual license. So you pay one time and till the license expires, it could be 10 years, 15 years, whatever period, but it's one time, right? You don't pay it again and again, right? So that is one time versus this thing. So it could be like that. So the other model is freemium, where some part of the service is free and some part you have to pay, right? So you could watch some movies for free. Some channels have that, some free you could watch, but after that, you have to pay. For example, newspapers have this. If you figured this out, like Indian Express, Hindustan Times, Times of India, when you on the mobile, you read articles, you can read a few articles. If you Google and you read one or two articles, the moment the third article you click on, they will say, we are a paid service, you please pay. So freemium, which is some free and some premium. So free is that, okay, 2-3 articles I'll give you, which is free. And then you have to pay for after that 3 articles, right? So many businesses are based on the freemium model. Many edtech companies, many services are based on the freemium model. A little bit is free, but extra services are free. Free to users, advertisers to pay. We discussed about this already. Okay. Okay. So this is about revenue. I did a quick this thing. Now let's get to costs. Right. So what are expenses or costs? These are all the costs, expenditure that a business spends to do its work. So revenue is something that you get from selling the product, but to make the product, to sell the product, right? You have expenditures, right? You have costs. So all those things are costs or expenses. So they're also called costs and expenditure. It's also the amount you spend to do your work, amount you spend to get the revenue. Okay, all that is costs, right? So why is it stalling? One sec, please. Yeah. So what are in a typical company, where all you spend money? You spend money on salaries of people, correct? Or if you're building a product, you spend money on the material cost. Okay, for example, spectacles, like Lenskart, right? Lenskart sells you spectacles. So the spectacles, obviously, if they price the spectacles at 3,000 rupees, then to make the lens, the frame, the material cost will be there, correct? And to manufacture it in their plant or whatever, they will have people. So their salaries will be there. Now to sell it, they will have people in the store. So their salaries will be there. Rent for their offices, that will be there. Electricity, utilities. If you are to manufacture an automobile, for example, right? To run the plant itself, you need so much of energy to run all the machines there, right? So that electricity cost itself is a big component in many manufacturing processes. For example, if you are to make steel, if you make aluminum, the energy cost is one of the biggest elements of the cost, right? Why I'm saying all this, you may not think of these costs in some businesses. So if you are thinking of any business where this is very important, right? You have to be very conscious that, oh, I forgot the energy cost for this, that way. Insurance, travel, taxes, vehicle usage, there could be hundreds of costs, right? Hiring experts, hiring venues, hiring lawyers, right? For example, if you're an event management company, then hiring venues is a cost, right? Different venues you have to hire. Or if you're an exhibitions company, then this thing could be venues would be high. Hiring lawyers, if you are constantly like Like for example, companies which are in property loans, for example, HDFC housing loan, right? Now, what do you do when you give a housing loan? You are evaluating the property documents, correct? So when I'm saying hiring lawyers, it's not only to do litigation. As part of your regular business itself, you may be required to hire lawyers. So, for example, in HDFC case, when they're giving housing loans, right? Every document has to be verified. So they have in-house lawyers, they have external freelance lawyers. So it's a regular part of their cost, right? So these are examples. So typically, net, what we are saying is that there are many costs, many types of costs, and Abhishek, when I present, there is that band which comes in Zoom. How do I remove that below?
What
Ritesh?
band? What band?
The whatever the floating panel height.
So there's an option to hide the same.
Yeah. Okay.
Go to settings and you
Yeah, I
can
got it.
Okay.
So do all businesses have same type of costs? Let's do a quick check. What do you think, guys? And how does it come back? How do I bring it back?
You can just move your cursor there.
Okay. Because it didn't come back. So yeah, got it. Okay, let's do a quick check, guys. Do all businesses have same type of costs? No, Gagana says. Ritesh says no. Why do you think they'll not have the same cost, Gagana? Why do you think they'll not have the same costs? Everybody will have salaries, everybody will have rent. Why do you think they'll not have the same costs? Depends on the different strategies, a way of operation. Correct. For example, if you're a trading company, right? If you're buying products and selling products, actually to a large extent, Flipkart buys products and sells products. So it will not have manufacturing costs, correct? It will not have its own factory, correct? So all the costs related to basic raw materials, it will not have it all. It will just buy a product. It is actually, it's an e-commerce portal. It doesn't buy, but some products it buys also, right? So its own branded product. That was a buy. Somebody else is manufacturing it. They are not manufactured. So they don't have input direct costs, things like that. So yes, so that's the reason why many of these will not have, right? So it's why this point I'm making is that these 2 points, there are many costs when you run a business, is that don't assume that only 2-3 costs. You have to think very carefully when you write a business plan about all the minor costs that are relevant and make a list and then account for it. If they're very small, like some stationery, etc., which are not relevant in your business, that you can ignore. But you can't leave out costs by which are major. A lot of times when I get business plans, I will think, hey, what about this cost? Then they will go and add that cost, and then they'll figure out that the business is not profitable in the correct. So that way. So they've not thought of some costs, right? Similarly, they because every business is a different type, you can't copy your business model just cost from somewhere else. You have to think through, and you have to you have to think through carefully your list. It's very important to develop this cost. Okay. Now coming to costs, costs are also classified as direct costs, indirect costs, and capex. Okay. Now I just get to that. Slides now moving away. Yeah. So what are direct costs? This is a very important definition. So just pay attention a little bit. Direct costs are all the costs which are directly related to the manufacturing or the manufacturing of a product or the production of a service. Okay. So for example, if you're manufacturing a product, then all the material costs that go to it are direct costs. All the direct selling costs. So the cost related to the manufacture and the selling, the direct, what you can attribute to the cost. Okay. So for example, lens cart example. The materials that go into the spectacles are all direct costs. The staff which manufactures it is all direct cost, their salaries. All the staff which sells the product in the store is all direct costs. The retail stores that they sell it, for example, the rent of the retail store is all direct costs, because without the store, you can't sell the product directly, correct? Cost of servicing the product, if a lot of servicing is required, even when the product is being used, that is a direct cost, okay? Cost of manufacture delivered a service. So if it's a service that you're delivering, for example, you're a pathology lab, right? And the service you're delivering is you are taking the blood, whatever sample, and you're delivering the result, the medical test results or whatever, right? So the pathologist who's delivering it, that is the direct cost. Okay, he's delivering a service. For example, if you are a gym, then the gym trainer is actually delivering a service, right? Gym is not selling a product. So gym trainer is a direct cost, like that. So these are direct costs. These are the costs which are directly impacting the product sales. What are indirect costs? Indirect costs are like head office cost, right? So even if, head office is required, but actually to make the product and to sell it on the ground, even if the head office one day takes a holiday, nothing will happen, right? It will keep going on. So head office costs are indirect costs. Cost of many of the managerial staff, like the senior management, for example, the CEO, CXO, CTO, those are all indirect costs, okay? Who are involved in running the business, but who are not directly impacting the product on a day-to-day basis or a hour-to-hour basis. Brand building costs. See, when Geo advertises or when people advertise in IPL, they may not be getting customers directly from the ad. Some of it they get, some of it. Many times they're making these big sponsorships to make their name famous. Once they make the name famous, they're parallelly also advertising on various. They're improving on they're working on their SEO. They're doing digital marketing. Those are direct costs. SEO now, because that is directly attracting the customer, right? But the brand building cost may not be, it's just to create an impression. It's just to create, you cannot directly say that because you put an ad, because you sort of were co-sponsors for IPL, you got so many customers, right? You can't say that. Yes, all that indirectly gets you. So the accounting costs, for example, when you run a business, you hire accountants, you have to write a profit and loss statement, that is indirect cost. Financing costs. In some businesses, financing costs. For example, if you are a fintech company and your main product is the loan that you're giving, the micro loan that you're giving, then the financing cost is a direct cost because that is your direct business. But if you are manufacturing a product and to make the product, to finance the entire operation, you've taken some loans, some working capital loans. Okay, that is indirect cost. So you have to be very clear what is direct cost, what is indirect cost, and in your model you have to write them separately. What is capital expenditure? Capital expenditure is not costs, which are these are money you spend, which is utilized over a long period of time. Okay, for example, when you build a building for your say, for example, say an automobile company has built a plant. Right now, the plant is not going to get used in one day, right? But the steel which goes into manufacturing that car, that will get utilized directly that day. Or the electricity utilized to make that car, that is getting consumed directly. So those are direct costs maybe, okay? But the plant is going to be there for maybe 10 years, 20 years, 30 years. So that is capital expenditure. What you invest to build the capital, any investment you make from a long-term perspective, which is utilized in the business. It's not that not utilized, but for example, you do R&D, that is long-term, because you're not going to use the R&D the same day. Similarly, any brand building you do for a long-term perspective, right? For example, when companies like Pepsi, Coke, or many of these brands, when they enter a new country, first 4 or 5 years, they'll be spending crores of rupees on brand building to create the name of the brand. At that point in time, they don't even have the sales on the ground. They will not even have agents. They will not even have, like, for example, Apple. today, iPhone, etc. Many things they do in India, which are actually brand building. They don't even have, they may not have that much of sales, or they may not have so many retailers or this thing at all to take advantage. But so that brand building is for long term, right? So that is capital expenditure. Now, capital expenditure is treated very differently than direct costs and indirect costs. You cannot subtract capital expenditure from the revenue of the same year, right? So suppose your revenue is 1 lakh rupees and your direct plus indirect costs are 80,000 rupees put together. Then 1 lakh minus 80,000, 20,000 is your profit. Now, to set up the business, suppose you invested in some equipment, machinery or something which cost 1 crore rupees. You cannot subtract it directly. That is a machinery which will be used over many years. So that is not to be added and subtracted in your P&L. Okay. So having understood some basics, some terms, all this will take more time to understand for you guys, but I'm just giving you a quick idea. What are the basic financial model? It is to make profit, and you make profit by obviously, the profit is revenue minus costs. Okay, so this is a fundamental equation. So, and when you say cost, it is both direct costs and indirect costs, right? So the fundamental thing that any business is trying to do is increase its profit. To increase profit, you can increase the revenue or you can decrease the cost. So these are the two levers. So when a business model is presented, people will keep asking, how will your revenue increase and how will your cost decrease for the same unit? Okay, it is not that, okay, so today I was selling 5 products, I will sell 10 products and my revenue is increased by 5. That is one way to increase. But if for 5 more products you sell, you will obviously cost to make that also will increase. So that means proportionally it can't keep going. So your profit will only increase only if the revenue is growing disproportionately, right? So here's a basic example of what you do when you present your data. So typically this is called a simple financial statement. You write revenues and you write expenses, right? So your revenues could be 3-4 types, as we discussed earlier with various examples. Revenue is not only one type. So it could be like in Flipkart's case, it could be the commission you get, it could be advertising revenue, it could be listing fees, like that. So all that make up revenue. So 3-4 elements. So whenever you write a business plan, if there are from the same business, there are 3-4 types of revenues, you have to write all of them. So in an Excel sheet, you will write the revenues like that, one below the other. That is the total revenue. And all the costs you will require, expenses you will require below. Now, when you write the expenses cost, obviously there are 2 categories of that, direct cost and indirect cost. You take it, you write it just to show, you write it separately. So do you understand what the direct costs and indirect costs are? But here, as a simple example, we've written it in a simple way. So this is called a basic financial model, right? And it's very important to calculate this in a basic way in an Excel sheet and to be clear and to present it very clearly. And typically a basic financial statement is written for a period. That is all revenues in a period, in a month, in a quarter, or in a year. So this statement here says month ending June 31st. So it's for a June month. That's what it says. So when you present financial statements in your business plan or whatever, you can present it obviously for the year 1, year 2, year 3. What is the revenue? What are the expenses? What is the profit? Like that. Or in a year, if you're not being a business plan, you can present a 6-month plan monthly. First month, second month, third month, like that. You can present it monthly. Yeah, Omkar asked a question: where would grants go in this sheet? Right. So this is a profit and loss statement, Omkar, in which grants will not go. If you are a NGO where that's the only income, then obviously it will go into the revenues column. Okay, but in a profit making enterprise, it will not go. A grant will be like a capital expenditure. Okay, that way. But if you are an NGO which is only doing that work, then obviously it will still go in the revenues column. Only thing is those are grants, right? Those are not direct. Okay, company may have 2-3 types of revenues. That's what we talked about, and different groups, monthly statement, monthly, quarterly, etc. See, when you present it, even making monthly statements is important, because initially for many months it may be loss making, and suddenly in 1 month you'll turn profitable as your number of sales goes up, right? So that is why many times making monthly statements. So in the beginning I talked about that there is a 9-year-old business which I'm mentoring. in which we were making. They were giving me a annual statement only. Then I made them do a monthly statement. When they started doing a monthly statement, that's when they realized that their costs, how their costs are changing, how their revenue is changing. That is when they realized many details about their own business, and then they could understand when they're actually turning profitable. So many times, even to understand your business, you may have to make this thing, right? So there are two types of basic financial statement, a profit and loss statement. So what you're seeing in the screen is a profit and loss statement. Balance sheet is the other document. I will not go in technically into that. Balance sheet is the snapshot of a business as of today. So typically, if you've got a grant and your capex, etc., goes into the balance sheet, it does not go into the revenue. So you don't write capex here. You will not write in expenses, capital expenditure. That will go into the balance sheet, right? And there's a line called depreciation. So that is a way to bring the capital expenditure into the profit and loss statement. Okay. But let's not get into that technicality. Just understand that you have to make a simple revenue and expenses sheet and don't add capex into it. That's a simple thing you can understand right now, right? But this is very important as you're making a plan to build this. So here's an example. This is from one of my startups only. So this is an actual statement. All the numbers are given in dollars because we're presenting to an international business. And we're trying to say how much profitability we'll make. So if you look at it, revenues from program enrollments, revenue from continuous engagement, there are two types of products. So in dollars, whatever, and this is not in is in some thousands of dollars or whatever, some units like that. So total revenue, then cost of delivery, customer acquisition, product spends, all that we have put. So the total, and contribution margin, which is the profit, revenue minus delivery. Then there is something indirect costs. We add that EBITDA we get. That is the actual profit. So first level is the contribution profit, one level of profit. It's also called unit economics, unit profit. The EBITDA is the next level of profit. And then there is some PBT, different levels of profit of that. And CapEx is mentioned below. The CapEx is not related to the above numbers. It's just mentioned that in every year, how much you are investing, right? So so using these numbers below, if you're in that slide, this is a presentation slide, we are saying that we need $4 million of funding. So that way, right? So basically the above chart will tell. So this is another way where these numbers are useful. Why are these numbers useful? Because when you present a picture, you have to present numbers like growth, like you're saying, number of leads generated, Q1, Q2, Q3, conversion rate, then average cost per sign up. So we are showing in that business that average cost of sign up is 680, then 610, 303, 256, like it's falling. So average cost per sign up is falling. Average cost of delivery is roughly remaining the same in spite of increasing growth in signups. That's what we're trying to say, right? So that kind of thing. So these are the metrics that typically people will ask, which can only come if you have a detailed statement like this month on month or whatever, right? That's the point. Okay, some key terms related to financial terms and model. Unit economics. What is unit economics? It is a unit margin. Now, many of the startups today are in loss because their unit economics is negative. Okay, which means the basic price minus the basic cost of the product minus cost of selling, the direct cost and direct selling, that is negative. In fact, in many cases, many startups, price minus is lower than the cost of the product only. Forget cost of selling. They've not even counted cost of selling. Cost of product itself, it is less. Okay. So but they keep selling because they think that they're going to make profit someday. Either the price will go up or the cost of the product will keep falling or something like that. They keep thinking like that, right? So some business story they will tell, and so like that. So, but the unit margin is a very, very fundamental, important thing. Okay. For example, let us take the example of lens card. The cost of the price of the spectacles is known, say 3,000 rupees. Okay. Now, you remove the GST in that, whatever, 20%. So to 600 rupees, 2,400 is the amount revenue you get. That is the price you get. Now your cost of making the spectacles maybe is 1,000 rupees. Cost of making will include material cost and the manpower cost, all that. The cost of selling maybe will be another 1,000 rupees, which includes a sales people to sell, plus includes the rent for the store, plus includes any direct advertising cost you do, etc., etc. Not the brand building, but direct advertising cost, all that. So you put all that. So maybe that is 1,000 rupees. Cost of manufacture of the product is 1,000 rupees. So 2,400 is revenue minus 2,000 minus 1,000 minus 2,000. So 400 rupees is your unit margin, right? So it is very important in a startup to have the math of the unit economics correct. If your basic product price minus this, why this important is, why this relevant also is that if you've not calculated your cost of the product, then you cannot take a decision on the pricing. For example, when Lenskart is doing this business, they're saying that, okay, let us assume we will sell 2 lakh spectacles in a month. Now to manufacture 2 lakh spectacles, what will it cost? So they're already taking a case where they're going to sell a lot of spectacles. But to manufacture 2 lakh spectacles, what is the cost they will take? Yeah, all the costs there, not just setting up the factory, that is capex, but actual product cost. Why should they take it at 2 lakhs? Because you're obviously not, if you buy materials for 10 spectacles, 20 spectacles in the market, when you buy materials like the lens or whatever, it will be very expensive. So you have to, when you think of business, you have to think of some scale and then do the costing. So they will take, okay, reasonable. In the first 1 year, we'll end up maybe selling 2 lakh spectacles in a month or whatever. So let's take that number. Now for 2 lakhs, they will look at the cost of the materials, cost of the making that, all that. Then cost of selling that, okay, we will have maybe online sales only first year, no stores. So online sales, setting up the website, all that, how much will it cost? How much will it cost to do digital marketing, all that they will add. Now so now for 2 lakhs, if this unit is not, so they suppose they get that the cost of the product versus cost of the selling is 1,500 rupees. Now they will decide that the cost of the spectacle should be 2,500 rupees or 3,000 rupees. So that they're making enough profit so that the indirect costs, the cost of the head office, all that other things are also taken care of. Because in unit economics, you're only looking at the direct cost, right? So the indirect costs are taken care of, right? So our future investments are taken care of. It's not, so that's all. So when we began the presentation, we said the business model will help you to take pricing decision. This is an example of how your pricing decision can be taken by this thing. Okay, EBITDA margin is unit profit minus indirect costs, and all other costs. Unit margin is price minus the direct costs. Indirect costs, if you add head office, all those kind of things, those are the EBITDA margin. That's the real profitability of the company. Many times startups, even if the EBITDA level margin is not there, gross level margin is not there, it will get still funded. Because obviously head office, those costs will be high initially. So they will, but at least unit economics has to be correct. So that's why investors will ask you, what are the unit economics? What are the price? That's why you should say, sir, my price is so much. My direct cost of manufacturing or doing the service is so much. My direct cost of selling is so much. So this is my unit economics. CAC is customer acquisition cost. It's a cost to acquire one customer. Many of the startups today are loss making, especially in the edtech space. Even the fintech space, because the cost of acquiring the customer is more than the price they're getting, correct? So which means in the unit economics thing, the cost of selling, right, that part is more than the price of the product only, right? So it'll never work out. Even my company Lodestar, when we started off, initially our cost of selling was more than the thing, but after a few months we have now controlled it. So our cost of product and selling is below our price, so we're making money that way, right? If you're not making money, then you have to constantly keep raising funding, which is what some of these startups do. But that gain can go on only for some time, or at least investors will not buy that. They will say, eventually, when will you make money? That kind of a thing, right? So LTV, what is LTV? Lifetime value. Sometimes what happens is that, let's say talk of a school, right? If I'm a school, I'm acquiring a customer, correct? In first standard. Now, when I'm acquiring customer, let's assume my cost of acquiring customer is 50,000 rupees. But in first standard, the fees I get is only 30,000 rupees. So obviously, my customer acquisition cost is more than the fees that I get for the first year. But in a school thing, when a student joins a school, that customer is going to be there in the school for many years, correct? So the revenues that come to the company are not, and again, second standard, third standard, you're not again acquiring the same customer. So same customer is available. So because it is long term, you have to look at the long time value of the customer. So lifetime value. So that is LTV. So revenues from a customer over a period of time. So in which case you can say, yes, my customer acquisition costs 50,000. So, but the same customer without additional spending of acquiring the customer is going to give you repeated revenues. So in only some businesses, repeated revenues are possible. In many businesses, repeated revenues are not possible. For example, when you sell a car, you can assume that a car a person will own for 7, 8, 10 years. He may come back and buy your own car. He may not come back and buy your own model. So your customer acquisition cost cannot be more than your cost of the first or profit you make from the first car you sell, because the repeat customer may not be, sales may not be there, right? Similarly, movie ticket, the customer can come back to your thing or not. It's not possible. So you have to make money with that one transaction. But many services are there where the customer definitely will keep coming back again and again and again. Okay. I'll give you another example. I don't know if you know of Mahindra Holidays. Okay, Mahindra Holidays or whatever. They sell holidays, resorts where you pay one money and you keep visiting again and again. In their case, the customer is coming back again and again, right? But same thing, a hotel, the customer pays once, uses the hotel for maybe 2-3 days for his holiday and goes away, a resort or a hotel. So the same model of holiday hotel kind of a thing, in the Mahindra Resorts thing, it is a repeatable customer, and here it is a single customer. So these are examples where the same business can have different revenue model. Break even is obviously when sorry. Now it's getting stuck. Just 1 sec, please. Sorry. Okay. So break even is when the total revenues exceed total costs. So what happens is unit margin, you may be profitable, but your indirect costs are very high. So as you grow the revenues, only the indirect costs will be covered. So that is a point in which, so till you hit break even, you need funding. So what happens is when you're building a startup, initially you have to ensure that unit margin is profitable. After that, you start selling the product. First month, you will say 5 products, next month 100, next month 200, next month 300. So over a period of time, your sales keeps growing. At some point of time, the total profit you make will be more than all the indirect costs, okay, and all the total costs. At that point of time, you don't need further investment. Till that point of time, your head office salaries or your other costs, your top management salaries, that has to be funded. So up to that point, up to the break-even point, when you make losses, that is the amount of money you require for the funding. Okay. Okay. I'm almost on the last slide. I'll pause here and I'll check if any of you have any questions till now, because I've been talking for some time and I've covered many topics in this. So I'll pause here. So on costs, on these points like unit margin, etc., is there any question? Or as you guys are developing your ideas, etc., now have you got some clarity? Do you have any ideas? Do you have any questions about this? Hello, are you guys there or you disappeared? No questions. Okay. Because I'm sure you're developing your idea and a model. So related to your idea specifically, is there any question? That's the point I'm asking. Sorry. Okay. I'm not able to see the chat window right now. Can we apply any insurance for startup? What do you mean by that, Syed? I didn't understand. You want to insure your business? Selling price, how it can be managed with the amount of manufacturing means? Sorry, I didn't understand this question also, Shomil. See, basically you determine the selling price after doing some calculation and figuring out what your direct costs, manufacturing costs are, direct selling costs are. That is how you determine your selling point, selling price. And in some products, if you manufacture more and more products, your cost of the input material, your cost of manufacturing per unit will keep falling. If it keeps falling, then that increases your profit, or that helps you to price the product better. That's all. So you obviously, whenever initially in a startup, you calculate the selling price of the thing, you do it not with five products, 10 products like that. You do it with some scale. You assume that, okay, in 1 year, I will be selling, say, 10,000 units. I'll be selling 5,000 units. So for 5,000, 10,000, you do an Excel sheet. You calculate. See, if I have to manufacture 10,000 product units, then what will be my cost? That way. For example, that's why I give you the example of lens card. They will take an example of 2 lakh spectacles. So 2 lakh spectacles may the pricing power, when you buy materials, raw materials for that, obviously you'll get at a better price, right? They will not calculate for 500 products. They'll calculate for a reasonable amount. They'll not calculate 2 million also. They'll not calculate 20 lakhs, 2 crore product. They'll calculate some reasonable number. And with that, they will calculate the costs, and that's how, yeah. Should we sell initial products in discount or at the product original price? This is a strategy question. It has not nothing to do with the model. Yes, that you can decide whether in that market, is there already a ready customer, or if you are the 5th, 6th player in the market, is that the differentiation? That is your thing. Both people do. They will sell it at discount, or they can sell it the original. There is no fixed rule for this. Omkar Rajesh, what is the usual GTM strategy of B2B ventures? Omkar, please hold the question. I'll take it at the end. Okay. But please remind me at the end. Huh? Just one. Okay. Anything else on the model itself, on the costs? Can we apply any insurance for startup? See, many startups insure many things. For example, if you bought equipment which are costly, you will insure that way. But there is no insurance for failure, right? If that is a question I'm asking, there is no insurance to failure. No. Yeah. Okay. Okay, so let me just go ahead and conclude this. So when you look at business models, like while we looked at the financial model, etc., there are many different ways to do business. We discussed with some examples, but I'll just summarize it here. For example, you could do B2C versus B2B. B2C is when you sell to the customer, individual customers directly, right? Which means individuals, they are not businesses. B2B is when you sell to businesses directly, right? So that is the difference between B2C and B2B. Many products, like I gave you Google's example, right? When Google had set it up, or for example, let us take Microsoft, Windows product. They will sell it to individual customers also. When we buy our laptops, whatever, it's bundled along with that, it's sold to us, individual licenses. They also have a B2B thing where they're selling it to a corporate. So corporate is buying it for its usage, the same software. They are not buying it. The individual customer is not buying it. So in your product, you have to think through, like I gave you again, Lodestar example. Lodestar is a career guidance service. I can sell it to the parent directly. I can sell it to the school. School means B2B, which means my customer is a school. The school will pay me the money. So why will the school buy it? Just because the students need it, the school will not buy it. Students need hundreds of things. So what will the school get out of it? So that is the question, that he's a customer, school is a customer. So I could do B2C, I could do B2B. So this is a very important decision that businesses make. So you have to be careful. You have to think through this. Is it a B2C product, B2B product? And the way to sell it, way to do everything around it is different. Then direct versus channel partner. Sometimes it could be B2C or even B2B, but you could go directly and your salespeople can be selling directly. Or it could be through channel partners. Okay, for example, automobile companies don't sell their cars directly, right? They have showrooms, and the showrooms are typically, some of them are owned by the company, but a majority are owned by the showroom. Is a separate business. The automobile showroom is a separate business. That he's an entrepreneur in every city. So he has got the license or the contract to sell, say, Kia Motors or whatever, or BMW or Maruti or whatever, right? But so he's a channel partner. He is selling your product in the market, right? He is himself a business. So you sell to the channel partner will sell to the customer that way, right? So similarly, if you're selling clothes, right, your channel partner could be the retail stores. So you sell to the retail stores, and this retail stores are selling to the customer. So it's channel partner business. So many businesses, you have to decide what and the pricing will be. So if you're selling to the channel partner, then you have to be careful about the margin for the channel partner. So in your cost structure, when you're doing the unit margin calculation, you have to look at the end customer for price for the customer. So for example, if your manufacturing cost is 2,000 rupees per unit, then you add 1,000 rupee margin, 3,000 rupees. So you will sell to the channel partner at 3,000 rupees. Now channel partner will also add 500 rupees margin. So 3,500 rupees or 3,600 rupees, which means for the end customer, it becomes 3,600 rupees. Now at 3,600, will they buy? You have to think that way. Otherwise, your cost structure, your profit margin is not working that way. So that direct versus indirect, right? So retail versus wholesale, similarly. So it's similar to direct versus channel partners. You could sell a product in wholesale bulk to the market, or you could sell in retail. For example, a lot of steel manufacturers don't sell in retail. They will sell bulk only to big customers, bulk. They don't sell anything in retail like that, right? Free versus freemium versus paid, right? Now, this is a big thing. Like we discuss examples like Amazon, like for example, Google, the basic service to the customers is free, right? Or freemium we talked about, or paid, completely paid. There is no free or freemium. This is a model again. Commercial versus social versus NGO, right? So commercial is completely very profit motive. Social is you're doing a social work, like you're doing education for rural whatever, but it is still paid. Somebody has to pay for it. Okay, that is a social enterprise. They are called social enterprises or whatever. So there are many companies which are set up in that, which are a motive of doing good, like healthcare services in rural areas, education services, rural areas. But it is paid. The end customer also pays for it. They may pay a small, lower amount because the model is designed like that, or on their behalf, somebody else may be paying, but it is a paid service. So as a company, you are still having a price and a cost, and you're calculating profit and all that, but still a social enterprise. Commercial is that you're directly, making profit is only objective that way. So the difference between social and commercial is social, they will be a little conscious that they don't make too much of profit. Their more goal is how many people get the service. That's the goal, right? But they'll still make some profit that way. NGO is where they're not bothered about profit only. They are only delivering a service, right? And somebody's fund. So grants NGOs get. So that is why it's not a revenue. They are not bothered about the making profit or anything like that. So many NGOs, for example, they distribute, say during COVID, they distributed food, they distributed blankets, they distributed stuff. So their work is how many people need food, how many people need blankets, I will distribute. For not distribute that to buy, and they have to get funded for that. So they'll get a grant. but they are not making any profit in between. So as compared to commercial versus social, they are not making any profit. There's no plus minus there. If they get 10,000 rupees and one blanket costs 1,000 rupees, they'll buy 10 blankets and distribute it. That's all. Small servicing fee they will keep, but there's no profit. That's it. That way. So that's an NGO. Online versus physical versus digital. So we know all this online models. Like Lenskart has online, was also physical. Lenskart has stores as well as online. And phygital is that combination, online versus some part of the business online. Lenskart is actually a classic example of phygital. You can place the order online. You can go and see the product in the physical store and maybe collect it in the physical store that way. So it's a mix of online versus online. Many businesses are only online. Many businesses are only offline that way. Okay. Done, guys. So this is the various types of business models. Just give you an idea. So I'll stop here. My presentation is over. I'll quickly summarize. When you have an idea, it's very important for you to think of what are the need, what are the problem, and who is the customer. That's as discussed in the first session by Shweta. Now, but having thought of that, it's very important to think of the details of the business model, which includes what revenues, what costs, what are the unit margin, what is the profitability model, where you will sell it, which customers, what are the channel of selling. Okay, because even channel of selling will build in its own costs. So thinking of the business model and how you make money out of the business is very important. Many entrepreneurs have thought of an innovative idea, but they've neglected the business model. They've neglected how they will make money. Because they've neglected that, those businesses don't grow. And then they get frustrated. They'll say, no, I brought a very good product to the market, but it did not sell. Yeah, because you did not think of the business model. How will the customer buy it? Will it be retail? Will it be direct? Will it be B2C? Will it be free model, freemium model, like that, right? So that you have not thought. For example, one of the biggest innovations in Spotify, there's a whole movie on Spotify, you guys should go and see it, is the business model. Before that, record labels were collecting, royalty on behalf of, and they were selling individual songs or labels or whatever, or this thing. This guy said it's a subscription service. In fact, it revolutionized the music industry when Spotify started, right? So because he said, I am going to just pay small revenue royalty to the music producer, the artist, and I'll own all the thing, and I will have a subscription model where you don't have to pay per song. You can subscribe, right? And there also he started a freemium model, for a little bit free, and then if you don't want ads, then you. This was actually a innovation and a revolution of the business model. But before that, people were selling music anyway. Music was being sold. It's a very old industry. Okay, so I'll end with that. This is why you should think of your business model, and business model help you to create a business plan, which will help you to pitch. Okay, that's the connection. Okay, hope I could add some value. Hope you got some value out of this whole session. It's a little technical that way, and you need to know some technical stuff. That's why the session went into many details. Yeah, so I'll pause here. And if you have any final questions, yeah, Omkar had that question about usual GTM strategies for B2B venture, which is a raw material in paint industry. Okay, so go-to-market strategy for I'll cover this. So B2B is obviously you're selling to businesses directly, right? So B2B, you can have again multiple ways of selling to B2B. One is people will have their own salespeople. They will go and contact customers. If the customers are very large, and if the industry has a lot of large customers, and it could be even 500,000 large customers, but you could still cover. For example, Airtel has a business for B2B, which is almost about 5 to 10,000 crores, or even much bigger, maybe now 10, 15,000 crores, I think, which is B2B. That is, they go to companies and sell them bandwidth and various other telephone related services, right? So they have a whole team. They have hundreds of salespeople. They have a whole hierarchy, and they go and sell directly. because each customer there, the potential of each customer is very high. So that could be one way. The second thing could be you could still sell B2B, but you are going through channel partners because the potential of each customer is not very high. So if you have a salespeople, it will be very tough for you. So maybe there are products. For example, in your paint thing, it could be through channel partners. Okay. Actually, it could be direct also. It depends on how many end users are there, because paint industry will not have so many customers. So it could be direct itself. But the other way is through channel partners. That could be the other way. The other way also could be that you set up a website, an online platform. For example, there are many B2B e-commerce websites today, correct? For example, in the construction equipment space, every space there are B2B. In the construction equipment space, there's something called off business, which is for contractors. So it is not for end customers, but India Mart. Yes, exactly. So like that. So you could have set up an online thing. So these are different ways you could use for B2B. Okay. Any other questions? This session, I think, went a little longer. Sorry, took more time, but I think there are many things to cover for on the business model. Okay, any other question? Thank you. I want now at least 2 or 3 of you to unmute and give me some comments, because very, very tough to just be speaking and not get any feedback. So I would request 2 or 3 of you students who've been very actively asking questions and all that, to unmute and either make a comment or say something about the session and what value you got out of this.
Good evening, sir.
Yeah, Sayed, finally, I hear your voice. Okay.
So it was great to hear you.
Yeah.
We learned many things from you.
Yeah.
In college, we study more about science. Now we came to know about business and business model, investments and all the things. So thank you very much, sir.
Lovely. Which year are you in, Sayed?
So I'm in third year.
Third year. And which college?
Vidyavikas.
Okay, okay. What branch of engineering are you doing?
I am in electronics and communications.
Okay, nice. So all the best for the competition.
Thank you, sir.
Yeah. Anybody else?
Good evening, sir.
Hello,
This is
sir.
Omkar.
Oh,
Yeah,
carry
Omkar.
on, carry on.
Yeah, Omkar.
So the session was really amazing, especially the revenue part, because when it comes to the balance sheet part, what I had known was that they put grants and funding in the credit part. So I got a little confused with the revenue part there. So that concept got cleared, sir. Thank you so much, sir.
Yes. So it's very important to have clarity on what your basic revenues costs are. And I see a lot of young startups make the difference, make the mistake, and then it's very difficult to explain the business only, because you can't answer questions of, okay, in year 2, how much profit will you make? They're all confused. So then if you can't answer the question, it looks like your business is dumb. Actually, your business may be good, right? That's the advantage of this. Good, nice. Thank you. Which year and which college are you in, Omkar?
Sir, I'm in second year. I'm from Dayanand Sagar College of Engineering, pursuing computer science and design engineering.
Okay, nice. Good. All the best.
Thank you, sir.
Gagana, you had unmuted.
Yes, hello, sir. The main intention of me participating in the Matrix Forum was to learn new things. Basically, learning about business in YouTube and all is a big challenge, because you're not sure if the person is actually truly experienced in the field which he's talking about. But listening to industry experts like you is a big privilege to us. So today I learned a lot of new things which I did not know, and thank you very much for making the session interactive, which is a really big point. Thank you very much for sharing your insights, sir.
Nice. Good. Anybody else?
Actually, thank you, sir. Like it was a very informative session and also very interesting one. You have shared all your experience on us. So thank you for that, sir.
Lovely, lovely. You guys are already thinking of some business idea, right? You don't have any specific questions from that business, like Omkar asked one of the questions, a couple of you asked, but you guys are, as you're thinking through, you're not getting doubts about your own business idea and about whether how to look at the business model, or you're too early, you've still not come to that level of writing down the business model. What is
Sir,
the
we
case?
had just started, doing this. So yeah, sir, it's a bit early.
Okay, good. Because typically when I do the sessions for other entrepreneurs or whatever, they already, if they're already thinking of a business idea, they'll have hundreds of questions related to their own business. Sir, how is this? Which is this cost correct? Is this profitability correct? Is this model correct? That's how the questions will be, which I didn't get many in this. I got a few, but not many. So that is why I was curious. Good, guys. Thank you so much. All the very best for the future legs of the competition. Please utilize all this knowledge. You guys are the future of entrepreneurship in India. We are from the older generation. We built companies, but now you guys are going to build the new unicorns and maybe the decacorns of the future. So hope all these inputs are valuable. Pay attention to the details. While entrepreneurship is very exciting and all that, there are a lot of details, hard work in every aspect of the business. It is just not the innovation part, right? Any aspect of business. Many businesses, as I said, succeed because they've thought through all aspects of the business. So entrepreneurs typically like an all-round cricketer. He has to be, can't be just specialist in one area. Okay. Thank you. Over to you, Abhishek.
Yeah. Thanks a lot, Murali, for a wonderful session, making it more interactive. And we didn't know how we passed 2 hours of the time. Yeah, thanks a lot, and giving such a good exercise for our students to understand in and out of business model. With this, thank you all the participants who are present, and we'll meet again tomorrow, the last session by Sandhya tomorrow at 6 p.m. So please do join and ask your friends to join. Thank you all. Bye.
Please don't miss the session, and tomorrow definitely be there, because it covers how do you write your pitch PPT, and which is one of the most important things for you to participate in the competition, right? So if you get that wrong, then you're not going to be able to even win the first level of the competition. So please attend tomorrow, get everybody to attend. Thank you. Okay.
Thank you all. Bye.